This video is about inheritance tax as it was in the 1970s, a sort of life on Mars for inheritance tax. Now this is the second of 3 videos about life on Mars for taxation. Now if you missed the first one, there's a link in the description below. Welcome to my video about inheritance tax, life on Mars. We're going to put on our cheesecloth shirts, we're going to put on our flares, and we're going to see if we can grow a Mohican. These are just my views about what might happen under a socialist government to inheritance tax. I'll be really interested to know what you think, so please comment below so that I can understand what your take on it is too. And if you've subscribed to the channel, you won't miss future videos. So the first place to start with inheritance tax is, what are the rules now? So the rules are really generous at the moment, and they mean that people don't really have to pay inheritance tax. So why is that? Well, firstly, because you have a £325,000 limit before you pay inheritance tax. And for most people, that means they don't pay it because they don't leave that much money. And for a couple, it's twice that much. So 325 times 2, £650,000 before you pay inheritance tax. And that definitely is enough for most people. But there's more than that. If you leave a house that's worth £350,000, and once the transition rules have come through, then you can leave £1 million if you've got a house that's worth £350,000. So £1 million before you pay inheritance tax, which is plenty for most people, and is why most people don't pay it. But there's more than that. In addition to that, you don't pay inheritance tax on business assets. So if you've got a business, you can pass that to your children without any tax. Your pension is out with the inheritance tax rules. So if you've got money left in your pension, that never touches your estate. And on top of that, if you give money and then live for 7 more years, then that money doesn't get included in your estate. For most people, that means that inheritance tax is pretty much optional, because there's a large limit. There's the 7-year rule on gifts, there's the business asset, and then there's the pensions. That's loads of space to allow you to avoid the tax. So the tax mainly rests with people who don't trust their families, or are a bit too miserly, or just don't understand what they're doing. So how might that change? Well, at the moment we have an inheritance tax, which becomes effective when you die. That might become a capital transfer tax, and I've seen things in the paper where they're looking to change it to a capital transfer tax. So if you give money to your heirs, then the tax is effective, whereas at the moment it's only effective when you die. And that changes it hugely, because it means that the 7-year rule goes out the window. It's taxed regardless. And what they're talking about is having a lifetime allowance, and then you get taxed. Now the crucial thing is that that lifetime allowance is miles lower than the current rate. Now at the moment you can give £325,000 plus extra for your house, and you can give your business property. They're talking about reducing that to £125,000, and that is a significant reduction, particularly since the 7-year rule goes out the window with the capital transfer tax. And what it'll mean is that if you work and earn money, say if you worked and earned £200,000, under the new tax regime that might be 50% tax, so your £200,000 becomes £100,000. If you then give that to your children under capital transfer tax, they would be taxed as income on that. So that would mean that it would be top sliced onto their income, and they'll probably pay 50% tax on it as well. So your £200,000 becomes £100,000, becomes £50,000. So if you want to give substantial amounts of money to your children, it becomes very difficult indeed. And that is the purpose of the tax, because a socialist government does not approve of assets transferring down through the generations, because that's how the wealthy pass their power and their wealth through the generations. That's the whole point. So what can you do to protect yourself against inheritance tax changes? Well, I think if you've got assets and you want to give them on to your children, I think having a plan is a really important thing to do, because what you want to do is make sure that you give assets during the current regime and not risk waiting until the regime changes and then have to pay much more tax under a changed regime. what I'm not doing is suggesting that you should just give all your assets away, but I think having a plan, one that you can act in good time before there is a change in government, so that means having a plan now that you can act if it becomes obvious that there's going to be a change in government, I think that's something really useful. And if that plan, you know, it might take a couple of months to actually enact, then you need to be quite nimble on your feet. But having the plan now and having it thought through now is the way that you're going to escape these potentially quite high rates of tax. But as I say, this is just my opinion. Please, if you think I'm wrong, please comment. If you think I'm right, or if you think that you've got something to add, I'm really interested to hear what you've got to say. And thank you for watching.